For those serious about becoming successful, consistently profitable options traders, now is the time to build skills in technical analysis, market analysis, and applied volatility to get those results. We have multiple memberships, starting with our Go membership that teaches rules-based trading and our Pro membership that teaches more subjective trading. For more information, go to lockeinyoursuccess.com/memberships.
Hello everyone, my name is John Locke and I'd like to welcome you to The Winning Trade, but first the required disclaimer material. This presentation is given for educational purposes only. We're not broker-dealers or financial advisors and we're not making any specific trade recommendations. Also, please be aware, your risk in trading options is substantial. Please make sure you're aware of all your risks prior to placing any trades. Also note that this presentation includes hypothetical computer simulated trades and the results. Your ability to be as accurately represented as possible, keeping in mind that live results can vary from simulated results for many different reasons. If this is your first experience with us, my name is John Locke. I'm a trading performance, wealth, and success coach from Locke in Your Success LLC, where myself and my team of mentors are here to help you win in the markets and in life as well. And today we're going to take you into the realm of high probability options trading. This is where we utilize option strategies to make money from the passage of time rather than, or in addition to, price movement. This means that we can often be profitable whether the market goes up, down, or sideways, and that gives us a very large advantage over somebody who's strictly trying to trade directionally. And today, the strategy I'd love to share with you is called the X4 version 17. The X4 version 17 is a high probability positive theta broken wing butterfly strategy that we've used on the SPX. And it requires a minimum of $1,500 per trade. Our example size is going to be a 15,000 planned capital trade. And as far as profit targets, this strategy does not have a profit target. We have different types of exits, as we'll explain as we go along. But in general, I would expect a good trade cycle to run about a 15% of our planned capital. And our exit loss trigger is going to be 16% of our planned capital, or in this case, $2,500. So let's take a look at the strategy. But before I do, I'd like to remind you to please like and share our videos. Helps us continue to bring you this wonderful content. Also, please feel free to leave comments, ask questions. I answer all questions and comments personally. Okay, so this is what the X4 version 17 entry position looks like. This example is going to be a January 2024 expiration. We enter the trade 77 days to expiration. There are no technicals. I mean, of course, if you understand the technicals, you understand the markets, you can always apply that to any strategy. This example, however, is going to be completely non-subjective. So we're going to come in 77 days prior to our expiration cycle. We're going to take a look at the asset price, which is right here, 43.62. We're going to go 17 to 27 points under the market with our short strikes. This is going to be a 10 lot. So we're going to have 10 broken wing butterflies on. Then we're going to have a 60-point lower wing. And normally we're going to have a 40-point upper wing, which is going to look like this. And under certain implied volatility environments like we've had since COVID, this is giving us what we call an excessively positive delta. This strategy, it needs to be under 10 delta on entry. So for delta correction on this particular strategy, what we're doing is we're taking our standard 40-point wing and we're taking half of the strikes and widening them out to 10 points. In this case, if we do that, it gives us a delta number of 9.93, which is under positive 10. And this is going to be our entry position. Now, this strategy is extremely simple and it doesn't take a whole lot of management. Really, the only time it takes any significant amount of management is if we get a very hard down move, in which case we'll be rolling the strategy back. So if the market comes down under 43.40, of course, we're not checking this during the day. We're only checking this at a specific time during the day. In this case, it's going to be 15:30 Eastern time, which is half an hour before market close. So if we come in at our checkpoint time and the asset price is under 43.40, we're going to roll this back. We're essentially going to close the position out and move it back. Other than that, we want to maintain positive delta within the strategy. So if the strategy gets negative delta at all, we're going to make a delta correction. Our delta correction is going to be something like this. And when we make that delta correction, we're going to want to watch our maximum capital. We're only allowing 15,000 planned capital in this position. So if we had to adjust it this way at this time, for example, it's going to exceed our planned capital. So we're going to make a correction here. And that would be our adjustment for the strategy if that required a upside adjustment at this point. So let me clear this out. And that's what we're going to do. So we're just going to go along. I'm going to check this once a day. If it requires an adjustment, we will do that. So I'm just going to jump ahead probably like a week at a time, just so you can get a reference of where the market is. It's fairly long term. It's 77 days. But again, it's very hands off. Let's see. It's November 3rd. Let's jump ahead to, say, the 17th. So some time goes by. In this case, the market goes up quite a bit. If we take a look at what happened in the price chart, looks like we were back here, and we had this exponential up move. Currently, we're up 13.10, and we're still positive to delta, so there's no adjustment trigger. Let's jump ahead another couple of weeks here. We get further up move in the marketplace. We're starting to take on a little bit of negative delta now, and we're up about 1460. And this is what we look like here. I'm just going to go day to day. All right, looks like our adjustment here is on the 4th of December. So let's just jump to the 4th of December. I'm going to hit ignore trades. And what happens? We get a down move, and that down move pushes us negative delta. That does happen, right? We got implied volatility skew curve changes, and although we were positive delta and we got a down move, sometimes that T plus 0 line shifts on us, and that's what happened here. So what we're going to do is we're going to make this adjustment here, and that puts us over 15,000. So we're going to have to bring this here, like we were saying earlier. That puts us negative delta again. That means we have to go a little bit more aggressively here. And if we do this, this gives us the balance between being at our within our capital limits and then also making our positive delta adjustment. So let's ignore trades. This is our new position here. At this point, we have a rollback point if we get all the way back to 43.50. And of course, if we start pulling negative delta again, we will make another adjustment. Pretty much basically what happens here is our first adjustment was, let's see, we went from 77 to 46. So our first adjustment was 30 days into the trade. And after that, there are actually no adjustments. So we can move ahead here. It's December 1st, and you can see that we're up 17.95. And our delta is pretty much neutral here. One of the things we watch is to see if we actually have the value difference in order to do this. So this may turn negative delta at this point. We're so far outside of the area. It may turn negative delta, but it doesn't benefit us to make an adjustment, so we won't do it. So basically here, this is a trade. We're just going to continue on till our exit date. Now our exit guidelines tell us to exit when the cycle two cycles forward is 77 days to expiration. So we're not pulling this into expiration, although subjectively you can do that. Also, subjectively you could exit where you figure your maximum profit and you probably don't have anything left, but the guidelines do not support that. And we're trading this guy by the guidelines. So what we're going to do here is just go to, let me ignore this trade. Let me go to next adjustment. And here, what happens is we are all the way up here. We're up $1,783 on our 15,000 planned capital. And we're exiting because our March expiration cycle, that's our companion cycle, is going to be, in this case, 77 days to expiration. And you can do these in the weeklies if you want to. I mean, that's perfectly fine. It really doesn't matter. What you do have to pay attention to is which cycle is essentially 2 months ahead of where you are now so that you can mark the 77 days. So if I went in a week after my If I started the trade a week after my monthly cycle, then I would end the trade when the week after my monthly cycle, which is right in here, is 77 days. Okay. Actually, it's not even active yet, but it should be active by the time that happens. So what we would do here is we would just simply close this trade out at our profit of $1,782. And that would result in a 11.94% of our planned capital. As you can see, this is an extremely simple strategy that's extremely easy to manage. And like I said, we entered this 56 days ago. We had one adjustment and we exit here. Fantastic trade, and this is fairly commonplace. Most of the trades go like this. Of course, they don't all go like this, and you can potentially lose under certain types of market environments. But this is a strategy we've been trading quite a long time now, and I really, really love the strategy because of its simplicity and its great returns and its consistency. And that is the X4 version 17, this episode's winning trade. If you liked what you saw, I encourage you to come on over to lockeinyoursuccess.com. That's LOCKE inyoursuccess.com, and discover how you too can follow along with this and many other great trading strategies as they unfold during our weekly options trading for income webinars that we have every Monday for our Go and Pro membership. Also, be sure to check out thewinningtrade.com. That's thewinningtrade.com, where you can learn about upcoming winning trade presentations, explore past winning trades, and gain access to free bonus material. Also, make sure to check out our free trading performance podcast, where you can learn to skyrocket trading regardless of the type of trading you do. Also, make sure to subscribe and like our videos. And if you have any questions, comments, or anything else you'd like to see on the next winning trade, please put that in the comment section. I answer all comments and questions personally. Thank you for joining me, and I look forward to seeing you on the next winning trade.